Good morning this Monday, the 31st of July. I'm Grady Bull for Market Analyst with Bell Direct. Wall Street closed higher on Friday and notched out gains across the key indices for the week as investors welcomed favourable inflation data in the form of the Personal Consumption Expenditures Price Index. The data is a key driver of the Fed's interest rate decisions and gained just 0.2% month on month, the same reading as the month prior and well below the anticipated 4.2% rise. Stronger than expected GDP in the US and a better than expected earnings season so far in the US has analysts believing markets could jump to new highs. On Friday, the Dow Jones rose 0.5%, the S&P 500 added 0.99%, and the tech-heavy Nasdaq lifted 1.9%. Proctor Gamble shares rose 3% on Friday after the company posted earnings and revenue that beat analysts' expectations for the most recent quarter, while Intel jumped 6.6% on Friday as investors welcomed the tech company's return to profitability. Over in Europe, markets closed mixed on Friday as Germany's economic growth stagnated in the second quarter, indicating the economy is stuck between stagflation and a recession. The Stoxx 600 fell 0.2% on Friday, while Germany's DAX rose 0.4%. The French CAC added 0.15%, and in the UK, the FTSE 100 lifted 0.02%. The Bank of Japan maintained its negative interest rate on Friday, but announced it would allow greater flexibility in its targeted range for 10-year Japanese government bond yields, with some analysts taking that as a sign of a potential policy shift to come. The strict yield curve policy will now allow plus and minus 0.5% movements, and the Bank of Japan will now offer to purchase 10-year JGBs at 1% through fixed rate operations. Locally on Friday, the key index fell 0.7%, driven by the US sell-off on Thursday. However, for the week, the ASX 200 posted a 1.23% gain. The REIT sector took the biggest hit locally on Friday, while consumer discretionary stocks also fell 0.88% following the release of retail sales data for June. The data showed the full impact of the RBA interest rate hikes are having on consumer spend, with the reading coming in at a decline of 0.8% for the month of June, down from a 0.8% rise in May and below what consensus was expecting of a flat reading on the prior month. On the commodities front this morning, oil is trading 0.11% lower at $80.49 a barrel. Gold is up 0.76% at $1,959.85 an ounce, and iron ore is down 0.87% at $114.50 a tonne. One Aussie dollar is buying 67 US cents, 93.77 Japanese yen, 51.63 British pence, and 1 New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia, the SPI futures are anticipating the local index to open the first trading session of this week up 0.26%. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the 12-month price target on Capricorn metals to $5.19 from $4.95 and maintain a buy rating on the Gold Exploration and Development Company following the release of the company's June quarter update, including Capricorn metals producing 120,014 ounces of gold at the Karlawinda Gold Project over FY23 at all-in sustaining costs of $1,208 per ounce, which fell slightly short of production expectations by Bell Potter analysts. However, the AISC were below BP expectations. The company also boasts some of the lowest costs in the sector and consistently generates strong cash margins. And Trading Central has identified a bearish signal on Regis Resources following the formation of a pattern over a period of 72 days, which is roughly the same amount of time the share price may fall, from the close of $1.71 to the range of $1.32 to $1.42, according to standard principles of technical analysis. And that's all we have time for today. Have a magnificent Monday, and as always, happy investing.